and welcome. You're watching Business Today. I'm Neetu Chandra Sharma. Pharmaceutical company Dr. Reddy's announced its consolidated financial results for the quarter and year that ended March 31st, 2025. Despite global challenges, the company has managed to achieve growth. To help us understand the key drivers of this performance, I'm joined by MV Ramana, Chief Executive Officer of Branded Markets at Dr. Reddy's. Thank you for joining us today.
Thank you.
The company has reported a 12% revenue growth in FY25 despite price pressure in North America. What were the main drivers of this growth and how sustainable it is for the FY26?
Sure. So I think in terms of the growth for the quarter four as well as for the whole year, the growth was driven by a double-digit growth across most of the markets, whether it was in the US, whether it was in India, whether it is in emerging markets, and also in Europe. In Europe, we got a benefit of the acquisition of NRT, but even without that, there has been a double-digit growth in Europe. So a lot of it has been because of how the base businesses have done well and the introduction of new products which we have introduced across all of the markets. The second, we have been investing now for some time to get access to innovative assets, both in India and emerging markets, and that is also contributing. And the third is our focus to increase our presence in consumer health. We have been in consumer health now for some time in the emerging markets, but through the acquisition of NRT, we started to have the presence in Europe. So all of these have contributed meaningfully to the FY25, both for the quarter four as well as for the whole year.
The company is exploring inorganic growth opportunities. Can you share more about what kind of acquisitions or partnerships you are looking at in the FY26?
Sure. So, from a point of partnerships, the primary access to innovation is through the partnerships. So, we are working with many innovative companies across the world to bring in those innovations that both India and emerging markets need. And we have a couple of them already launched in India. And when it comes to inorganic, we obviously our first and preferred market would be in India, followed by emerging markets and consumer health. So this would be our interest as far as inorganic is concerned and partnerships in the form of getting access to innovative assets.
We would also like to understand that one of the key developments has been the integration of NRT business, which boosted your European revenues. So, what sort of contribution do you foresee in the coming quarters?
So we have been in the consumer health business for some time in emerging markets, but we wanted to expand this, and we see this as a business in which we would be able to have more stickiness and also build something more globally. So when we got this opportunity of the NRT, and that was a business that was spread both in Europe as well as emerging markets, we obviously took that opportunity, and it has now given us a platform in Europe, especially in the area of consumer health. This would also help us to add on more portfolio. And while we're doing this in the US, we do have a consumer business. We have an aisle going on in Amazon. So between emerging markets, Europe, as well as US, we have a meaningful consumer health business. And in India, we actually partnered with Nestle Health Sciences to get into the nutrition space of the consumer health. So consumer health is an important pillar of growth for us and will continue to be so as we move towards FY30.
So, what is the biosimilars pipeline looking for you? Your AVT03 denosumab biosimilar was accepted by the US FDA. So, what does this mean for your business in the United States, and when are you expecting to launch it?
Sure. So as far as the biosimilars are concerned, we have a strategy in which we are developing a certain number of biosimilars. Second, we're also working to co-develop the biosimilars and bring them into the markets. And third, in certain markets, we're also licensing in the biosimilars. When it comes to the denosumab, we have already filed this product and we expect it to go through the regulatory process so that we are able to bring the product into the market. At the same time, we have been able to work with Henlius for daratumab. We've also been able to work with Bioterra on a couple of biosimilars. And we've also got registration of our own products, not only in India and emerging markets, but also in Europe, and we expect to take up products over there. So biosimilars is an important strategy for us, but we're deploying various moves in order to be a much more meaningful player in the biosimilar space.
So let's talk about the Indian market. In the Indian market, you maintained your position as the 10th largest player in the pharmaceutical sector. So with increasing competition, how do you plan to grow further, especially in your vaccine portfolio?
So if you see the Indian market at this point of time is having a high single digit growth. We consider this still to be a very attractive market, and we expect that the Indian market will continue to grow. As an organization, we have good presence in about 10 therapeutic areas. And what we plan to do, apart from growing our mega brands in these therapeutic areas, we are sourcing innovative assets to bring in those innovations into India that could help us in a combination of our existing base growth plus this innovation to aspire for our intent to get into the top five. Apart from the current retail business, we also have aspiration to increase our footprint in consumer health, and to do that, we have done the Nestle joint venture. Being a company that is today zero debt, any opportunity, BD opportunity comes our way, and we expect that to meaningfully contributive and to be accretive to our P&L. We would want to also look for those opportunities. So all the three, I would say, moves should help us to propel ourselves to get into the top five in India.
Can you also share something about the vaccine portfolio? How do you looking at this particular segment, and how do you plan to grow?
Sure. So we have been partnering with Sanofi, and we're thankful that they have considered us as a partner for India. Having successfully taken the vaccines into the Indian market, we have recently had signed up with now Sanofi to bring in their respiratory vaccine into India. We expect to launch the product in the month of June, expected to be a breakthrough, especially for the infants, both in terms of the benefit that the product is able to bring and how the product is required in India. So aspiration obviously is to become the top one as far as the vaccines is concerned in the retail space.
If you can also tell us that we have seen that revenues from Russia and the Commonwealth of Independent States countries continues to grow. How are you managing the geopolitical risks and currency fluctuations in these regions?
So we have been present in these markets for more than 3 decades, and many of the brands are very well known. We have ensured that over the years, more and more patients and consumers use our products, both in prescription and the OTC segment. So, as a pharmaceutical company, our efforts would be to ensure that across the markets of Russia, CIS, our products are available, and that is something which we have been able to do so. As far as the currency risk is concerned, especially on the ruble, we take calculated risk in the form of hedging the rubles, and that has actually played out well for us. So, as long as a product is needed, and being a pharma company, it's our endeavor to ensure that the product is available in the market.
So when we look at the research and development, it's like 8%, 8.4% of the revenues now. So how is this investment allocated between generics, biosimilars, and novel therapies to support a long-term growth?
Sure. So the generics, especially in the area of complex generics, is a large part of our R&D. And this other important element over there is the biosimilars, followed by our own innovative assets. This is something that is required because a lot of the future growth of any company, especially pharma companies, based on the portfolio, and we are consciously building a more complex and a differentiated portfolio for Dr. Reddy's.
Okay, if I want to talk about oncology, how is your company expanding its oncology pipeline, and particularly with novel assets that are beyond complex generics?
Sure. So when it comes to oncology, and this is the one space where globally there's a lot of innovation that is happening, and the idea is to try and see if we could bring in some of those innovations to India. I just want to take one example of a product called toripalimab. This was a breakthrough designation that was approved in the US for nasopharyngeal carcinoma. This significantly improves the standard of care compared to the current for these patients. And in the last 6 months that we've been able to bring this product into the market, we have seen that the the patients are getting the benefit, the tumors are significantly reducing, and we expect to bring in more such innovation to the Indian market.
So, when we talk about the margins dropped by over 2.5% this quarter. So, with what will be the guidance for the margins in the next coming quarters, if you can share with us?
So that drop in the margins that you're speaking about is because of some one-offs, but otherwise, in terms of how we see the margins, we don't see this sort of a drop that we have seen specifically in the quarter four. As an organization, our aspiration is to grow double digit and to look at 25% EBITDA and 25% ROCE. You might have some fluctuations quarter on quarter, but on a consistent basis, this would help us to give the right returns to the investors and, more importantly, invest the money into the organization for the continued growth.
So, selling and administrative costs also went up by more than 15% year on year due to brand building and focus on consumer health. Do you expect this to keep rising, or will costs come down in FY26 as the business scales?
So one of the reasons why the SG&A went up is because of the NRT business that we had acquired. But otherwise, we are very conscious of all the costs because structurally, as we continue to make moves, whether it is in the form of innovation, biosimilars, getting more complex assets, we consistently, as an organization, look into the costs and see how we could get the best productivity out of them.
Okay, thank you so much, Ramana, for joining us. You stay tuned for more updates.
If you like the video, do like, comment, share and subscribe.